Tesla is joining the S&P 500. That's unbelievable. Actually, close to making history with how big of a company is going to land in the S&P 500 index. Going to do that in December. Is this a good thing or a bad thing? I actually think it could be a bad thing for index investors. I'll tell you why coming up. My name is Mike Bedard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Tesla, my goodness, what can I say? I love the company, love the cars. The stock's in a bubble. We've talked about this on the show before. It is projecting out future profits and potential, and it might be there. I mean, investors might absolutely be right, but it really means, Tesla has got to go to the moon, or maybe Mars in this case, in order for the stock price, for the company to really be worth $400 billion. But still, got a wave of unbelievably good news. Tesla's joining the S&P 500 on December 21st. That's incredible. And what happened to the stock? It surged. Now, mind you, it's already up over 450% year to date. And it jumped in about 15% early on pre-market trading. And as I record this, it's up about 10%. That's phenomenal because all the other indices are red. So if this happened on a euphoric day, it likely would be up even more. But so this is good news. This is good news. It joins the S&P 500 on December 21st. They're going to need to actually stagger the addition of the stock to the S&P 500 because it is such an enormous company. When it all is said and done, of the 500 companies out there, so the S&P 500 is a market cap weighted index, which means not every company has an equal representation. Apple obviously has an enormous representation. In fact, the big five, the five largest out of the 500 now carry the most weight of any five companies ever in the S&P 500. I believe it's broken that record. It is very top heavy, and adding Tesla to the mix only makes it even more top heavy. Tesla will represent about 1% of the entire S&P 500 index. So if you're a Tesla investor, if you've held Tesla stock, if you've held growth funds and tech funds like we have that are invested in Tesla stock, this is great news. This is great news. If you're an S&P 500 index investor, this could be bad news in the short term. Let me tell you why. So let me go back to what I just said, that this announcement has come from the S&P 500 and Tesla shares have surged. They're already up 450% year to date, and they're surging. It's going to be added to the S&P 500 index on December 21st. If you hold the index, are you buying Tesla high or low? You're probably buying it high. The price has absolutely just surged just on this announcement. And then it will likely surge. I'll tell you a story in just a second. It will likely surge as we get even closer. Now, I don't know what the financial and stock market climate will be around December 21st. That's the future. I would say can't know that. No one does. But likely as it gets closer and closer to being added to the S&P 500, demand will likely go up, and could likely push the stock even higher. Does that mean you should jump out and buy the individual stock today? Maybe, I don't know. But good idea. So if you own the index, or if you own mutual funds that try to compete with the S&P 500, like significantly, a large portion of mutual funds, this could be very damaging. You could be buying Tesla high on December 21st and therefore have a lower future expected return, or potentially be buying into that bubble at even more inflated prices. So there's yin and yang here. There's pros and cons. If you are already a Tesla owner, I had a client who told me recently, hey, I would love to buy Tesla at $400 a share. If it dips that low, let's buy some. And so we put in a limit order, and that tripped late October. So she was able to buy some shares at 400. If you own the stock, it's been drifting recently and has had a huge surge today. And I would expect, again, more surge coming as we get closer to December 21st. But if you own the S&P 500, or if you own mutual funds that are index weighted or trying to mimic or compare or benchmark to the S&P 500, which again is just an enormous amount of funds, this is probably a negative sign. This is probably bad news, because your fund, your investment will be buying Tesla likely at a much inflated price, doing the opposite of what my client did, which is, well, I'll buy it when it gets attractive again around 400 in her mind, and based on what we talked about. So that's bad news. Similar thing actually happened to Yahoo during the tech bubble. Another analogy to the tech bubble and where we are right now. But Yahoo back in '99, when they were added to the S&P 500, their stock surged 64% in just a couple trading days. Now, that's nothing to Tesla. I mean, Tesla's stock has already had that kind of volatility before, but 64% in just a couple of days, simply because the company, the stock, the shares of the stock are going to be much more in demand by all those mutual fund investors or those individuals that are trying to compare their performance to the S&P 500 in order to make sure there's not drifting and a deviation from that, in order to keep up. All these mutual funds, all these companies know that they're going to be buying into Tesla in or around that time. And so going back to Yahoo, it's 64% increase in the couple days before it joined the S&P 500. So that could be in store for Tesla. I'm not giving investment advice. Can't do that on this channel. I can only do that one-on-one, belly to belly, in my conference room or with one of my CFPs. So good news for Tesla. Potentially bad news for mutual fund and index investors. So what's the solution here? You could go out and buy Tesla. Again, that's your decision. This is not advice. The second thing is the index type funds, a lot of the ones that we use here at KFG, actually try to balance this reconstitution effect. And that is, when will companies be added to the S&P 500 or to small cap indexes or to the international indexes? When are companies set to be added? And then actually look to find a way to add those sooner or after. Basically, try not to buy at the peak, the natural peak that comes up right as demand, it reaches a frenzy right as the company gets added to that index. And so you could use, there are some indexes out there, index mutual funds, that actually try to balance out this reconstitution effect, is what it's called, by buying before or buying after. And that may make a lot of sense for you. Those are some of the strategies we use for some of our clients. So there you have it. Great news for Tesla, potentially bad news for index funds, but go out there and make sure you're taking your next wise step. Talk to your certified financial planner. See what steps you should be taking with this. If you don't have a CFP on your team, you can contact one on my team. Find us online, corehorn.com or wisemoneyshow.com, and we can go from there. All right, go out and take your next wise step in your financial life.